Well, Aaron from Superfund rejoins us for more Commod Chat right now. We talked exclusively about gold in our last section, in our last chat there, Aaron. But I know that you folks at Superfund are actually quite positive on the momentum ahead for other real asset classes, raw materials and the like.
Certainly that's the case, Bernie. We've been having short positions in natural gas, where we've benefited from that in the past few months with gas trading down to 3.5 BTU per million. And we've also looked at a lot of other commodity markets, everything from energies, metals, base metals, agricultural products, livestock, etc. We benefited from short positions in livestock. We see in sugar trading to 16-year highs in sort of a bullish uptrend. So there's lots of opportunities for a diversified trend follower like Superfund to benefit from the different moves in commodities. They're not always necessarily going to be up moves. We have to look at each individual market individually from a technical standpoint. But if you had to make an overall statement about energies, for example, we would think that in the long run, energy prices can certainly go much, much higher from here.
Are we, just out of curiosity, are you adopting more of a discretionary approach with managing the futures, or are you more a program at this point? Are you willing to outsource emotion control to a computer program? Is program trading more appropriate for the current environment than it was maybe a year ago?
Yes, program trading or systematic trading is actually the most efficient way to trade these markets. We can actually crunch using our systems terabytes of data instantaneously, where entire teams of analysts would take days and days to pore over the same data. So in a fully electronic marketplace, over 80% of the futures markets worldwide are electronic. We think the only way to compete is with a systematic approach. And certainly that's been the most effective way in the past 13 years for our investors at Superfund.
Okay, you're not 100% systematic though, right? I mean, you can dip in when you get these weird pricing aberrations with a little bit of human intervention where you feel appropriate.
Believe it or not, Bernie, we are 100% systematic. We use our technical trading program to do 100% of the decisions, using a maximum risk of 1% in initial risk in any position, and we place stop orders that are automatically adjusted by the system. So everything is fully automatic. Actually, there's no human decision-making process, and that takes all the emotions out of the trading process. For example, last year when oil was trading at $137 a barrel, nobody could have predicted that it would have traded as low as 33. Everyone was saying it was going to go to 200. But because the system was fully automatic and followed the trend, we were short the whole way down.
Interesting. I thought that the systematic and managed CTA, the momentum was last year, and that now that you've got some conviction about, some of the global trends, the global macro funds, maybe the arbitrage type of operators might enjoy a better 09 than the theorem or the process that we're talking about right now.
It's too early to tell for 2009. I could tell you that as of September 1st, 2008, CTAs or Superfund was actually down for the year. We finished the year up between 35 and 74% just for 2008. So you're 100% right that 2008 was a great year for managed futures. What you have to ask yourself is, will there be big trends going forward? And with a $12.8 trillion in stimulus and bailout packages from the Obama administration alone, we think this is going to lead to massive trends in the markets over the next 2 to 3 years that we can benefit on the long side and on the short side. So we think that a diversified future strategy where you can trade long and short is going to be much less risky than a long-only stock approach.
Aaron, great talking to you. You have a great rest of the week. Well, and say hi to everybody at Superfund, okay? We'll talk soon. Aaron Smith, Superfund.